Hello guys, welcome to this new video, and we are gonna have a detailed look into the market of financial market in total. I will be looking into the crypto market and forex and stocks and every single things in this video. And if you're new to this channel, don't forget to subscribe this channel and click those bell buttons and all that things and smash the like button as you are just hacking these Google algorithms. And here we are going to start this video. Okay, so uh, I've been doing this video updates for a long time, maybe for since we were last bull market. We're just doing and starting these things and posting up updates over that Telegram channels. And here, when it comes to this gold market, and that move up was kind of like the part of a downtrend, and the trend hasn't been changed yet, and we are just still in that downtrend. But yeah, it's look really scary at this moment, and it's kind of the volatility is dropping, and it could be the final trap either. And this expansion of this last final volatility looks like it's kind of looking to this downside again, and not expecting anything to the upside. Potentially be already, if the only case there we do have a little bit of hopium for the reversal back into the upside is going to be this happening as a inverse head and shoulder. As an inverse head and shoulder, that could be more ideal case if you are thinking it's going to be a bullish thing. But if it's going to be an inverse head and shoulder, this shoulder, not the shoulder, but the head should be a little bit more lengthier to the downside on getting a support from here, or they are going to be waiting to get this liquidity and making bigger positions from here, and then move up. That could be one scenario that I'm looking for the gold. But is that a good thing, or is it a good thing to trade the gold right now? The question is really important to ask yourself. My answer to that question could be no, because it's really visible that from the time period of May 2029, or particularly saying from this period of time, or yeah, from April of this year, the gold went into a lower volatility period of time. So there, if you were making some positions on this gold, you are probably going to get wiped out from your account, or there's a good chance for that. Obviously, you're going to lose your funds, because those choppy market is not an ideal case for trading. Even if you're doing the intradays, there was terrible events. I traded this gold at those times and got a bunch of losses. So it's not a good time to trade this choppy market unless you know how to trade it, or you do have some edges. All that is only applicable over this time of a low volatile market. But in my experience and my knowledge, I would like to tell you that it's not a good thing to trade in a low volatile market, because the volume should be there. It should be really lower when it comes back to higher volatile market, and especially in this commodity session. I'm not talking about the crypto. There are the lack of liquidity could lead to a higher volatility market, but in this case of gold, it's not the case. So here, when that's the case of the gold, obviously we have covered that. And in the case of crypto, we are expecting, our expectation was completing this as a flag pattern and moving to the upside. But what actually did happen here is it's actually turning into a head and shoulder pattern. Maybe there is have a good chance for that, developing a head and shoulder and creating a trap here. When people see head and shoulder, they are much more likely to put more short position in the market, and then they're going to get trapped here, and market going to reverse from here. So that is a bullish scenario. That's more probably going to be something which I would like to see it, because in my case, the chances are, if the price is gonna come here, and it's gonna be a bigger range here, that's also one case. But overall, what the market is gonna do is it's an established kind of thing that it have already established its bottom. If it's gonna come down even more, then it could be a little bit of a spring kind of move here, a trapping move. And if you are gonna make build some positions here by putting a stop loss here at 9,000, that could be, or as a safety, yeah, below a $9,000. If you are making and building positions over the Bitcoin, as a long-term exposure, not as short-term things, and it should be kind of long-term, maybe probably 1 year or something, but it shouldn't be 1 year. I mean, I'm just recommending this thing, but because I personally would like to do that. It's not. I'm not sure that the market is gonna market. It's all running over the probabilities that you know better than me, because you've been a good time or the market, or probably less time, but a little bit of experience could make you understand that these things. So this thing is working on a probability basis, and there is a probability for happening anything. It can go up or down, but more probability is what I'm going to see right now here is, one scenario is it's going to kind of range here and move up, and it could create a spring here, because that is Wyckoff accumulation rule. It's that theory that tells you that in an accumulation time frame there should be some sort of a spring. It's created there. So that's the case one. And when it comes to the other things here, what do I call it? Second probability or second scenario that's going to be a more ideal thing to happen in the market is creating a shoulder, creating a fake out, and moving up. So in both cases, I'm looking upwards. I'm a little bit of optimistic kind of thing here. I'm not looking What I'm not looking here is some sort of a big move down. I'm not looking for that, because I'm optimistic about the market, because we have a terribly low volatile market, and market wasn't giving anything. Okay, so here that's two market which I skipped over the last few months. If you are looking at my trading, I never traded gold and Bitcoin that much. Maybe one or two trades in BTC, and zero trades over the gold. That's what I did. And here, if you're looking at the forex, it's had some volatility. I could catch it up on GBP and Euro USD, and the only market which remains and which could give me a little bit of volatility to actually pick up some trades, and that were over the forex market. I would honestly, I'd tell you that. So when it comes to the S&P 500 ES mini, this thing, it's kind of looking towards the downside, but the chances are one more move up. So this is recommendable to long from here by putting a stop here below of that daily candle, because that candle looks like it's a little bit of a bullish hopium. This candle hammer pattern, low volatile, market creeping back into the volatility zone, and that's a good time for you to build some long exposure to this breaker blocker. That's one thing I might think to actually do with this S&P 500 ES mini futures contract. So that's it for, yeah, one more thing. Dixie's crucial thing. Oh my god, it pumped, but almost the pump is going to be ending here, and I'm still waiting for my bids to fill up here. On some indices basis, I'm trading on Coinser Trade or the other indexes, that is, or other pairs that is trading correlated to this Dixie. Okay, so that's one case. So this is what a total summary of the whole market, if I would like to sum up to. And here we wanna as you guys know, I'm less active on the Telegram channel. It's because I'm trading less. Okay. So bye guys. Take care. See you in the next video. Okay.